Welcome to the Think Small podcast, hypergrowth for small businesses. So, what's slowing you down?
Well, hi again, everybody. This is Rob Godlewski with the Think Small podcast. And today our guest is Brian Waldron. He's the CEO of Dort Financial Credit Union. Brian, thanks for being with us today.
Thanks, Rob, for having me. I really appreciate it.
Absolutely. So Brian, first tell us about Dort Financial. What are you? Why do you exist? And what kind of problems do you solve for your clients and customers?
Wow, that's a loaded question to start off with, but no, I appreciate that. So, Dort Financial Credit Union is about a $2.3 billion credit union located just outside of Flint, Michigan. It originated just about 75 years ago with AC spark plugs. So, in the automotive industry, obviously, Michigan, automotive, those things coincide.
Sure.
And so we started there, and over the course of time, we've changed our name several different times. But where we landed today is Dort Financial Credit Union, and we serve over 100,000 members across the country, but mainly located here in Michigan. We also have 4 branches in the West Palm Beach area of Florida. We do operate in Florida as Flagler Credit Union, a division of Dort Financial. So we have a different brand down in Florida than we do up here. And that came about as an acquisition that occurred in late 2023 of Flagler Bank. So, we've grown quite a bit in the last several years with that acquisition. But, our main purpose is to really live out our mission, which is to enrich the lives of our employees, communities, and members, right? So we really just want to be a way to enrich lives, because that means something different to everybody, right? So, in order to enrich one person's life, it may be there for their first home. For another person, it may be there to purchase their lake home. For a third person, it may be a home in Florida or some other place as they start to near retirement, or it could mean a brand new car. So we are truly there to help individuals wherever they are located and wherever on their financial journey, and to help them along.
That's amazing. So I know that a lot of our podcast audience are familiar with credit unions, but besides geography, what stands out for Dort Financial? How are you different than, say, just going down the street to a regular larger or mid-sized bank?
Sure. I think the biggest thing is, the way we invest in our community, right? We are truly living and breathing and helping those communities prosper, because that's where we live, right? And the reason I say that is over the last 3 years, our employees have volunteered over 8,000 hours to give back into the community, right? That's our way of saying, hey, we appreciate being here. We want to be a part of this community. And we also want to give back to those same people that we work and see alongside each day. And so really for us, it's all about how do we involve ourselves? How do we become more than just a financial services commodity, right? How do we stand out and become something better, right? And the way we do that is we encourage our employees not only to provide the best customer service when someone's standing in front of you, but to give back, right? To feel that blessing and pass it along every day.
And the existence of a financial credit union is very different from a bank, in that your clients and customers aren't just clients and customers, they're members.
Yeah. So, I personally, I love the concept of membership, right? But I think to me, it breeds some confusion in the marketplace, right? To join a credit union, it's not this cult. It's not this thing you got, you got to pay a monthly fee, but it really is. You actually put in a small amount. Usually it's around $5. Some places are, a penny. It just depends on the credit union. But you put a small amount in your savings account that really goes on hold. And what that really is that buys you your share of the credit union, because you have a say in the future of the credit union. And you do that by voting for the board of directors, much like a stockholder does for a company that's, held by stockholders. But as a member, you really become a shareholder in a sense. And so you have say in how that company progresses and where it goes by voting for those board members. I will say that all of our board members are volunteer here at the credit union. Not every credit union is that way, but they sometimes some small credit unions get a small stipend, but our credit union, everyone is a volunteer. So they're volunteering our time or their time to lead the credit union forward in a way that's identifiable. And so the word membership scares me when we go to market, right? But it's not that scary. So anyone should look at a credit union, in my opinion, and not be scared of that word member. It doesn't mean you got to take a test or join or anything like that. It's all about how you open that account.
And your members are specific to the geographic areas that you serve, correct? So
Yeah.
you're not going out there looking for customers on a national basis, but really it's in in the Michigan area, in the market you serve, and
Yeah.
with your recent acquisition of Flagler,
Yeah.
down in certain counties in Florida. So
Yeah.
that's also a difference.
Credit unions are held together by what they call the common bond, right? Now, over the course of, so when we first started, again, AC Delco, so AC Delco employees were that common bond that came together to help each other, right? Our common
Right.
bond now in Michigan is the entire state of Michigan. Again, that whole community of the state of Michigan. Even though we're central to the Flint market, we can serve anyone who lives, works, worships, or does business in the state of Michigan.
Okay. Okay.
Now,
So the
and the
first
four
time,
counties in Florida, obviously, to your point.
of course, of course. You know, that's interesting. Let's dig into that a little bit.
Yeah.
You wouldn't think that there's a direct connection between Flint, Michigan, and West Palm Beach, Florida. Tell us how that came about.
Well, so here's how I'll say this. So I call I've made this up, right? So this is all made up. So anyone who hears me, I refer to this as what I call the Michigan Triangle, right? So obviously, if you know anyone from Michigan, we always hold our palm up. This kind of looks like the state of Michigan. We can add the UP in if you want, but for most of us, we kind of live south of this. We'll call it I-69, right? The Interstate 69 that cuts across the state. That's where a
Sure.
lot of population is, right? And here's Detroit down in this area. And so what happens is people buy their lake house, right? Or something that they call is up north, right? So it's up in this region. There's a lot of lakes, a lot of beautiful areas in Michigan. So people buy their cottage, a little small cabin to get away on the weekend. And then eventually as they get close to retirement, they go down to Florida, right? And so if you connect the dots, it looks like I think it's obtuse. I failed geometry, I'm sure, but I think it's an obtuse triangle. So I call it the Michigan Triangle. I should probably copyright that phrase before someone steals it. But so for me and our executive team and our board, when we sat there and thought about it, what we were deciding is, a lot of our member base is going down to Florida for at least a certain amount of time a year, whether it's 3 months, 4 months, 5 months, 6 months, but they are spending some time in Florida. And, people can say, oh, well, you can do everything online, but sometimes there's comfort in walking into a branch or walking into a location or just knowing that you can get to a branch, right, if something comes up. And so instead of, so we wanted to be there for our members when they went south and retired. So we chose West Palm Beach. We do have some memberships that were already down there, some members that were already down there. And, we continue to look at expansion across the state of Florida so that we can serve all of our members in Florida as well as all of our members in Michigan as well as Florida as well. But staying within that triangle, right?
So did you find that those members who may have, bought a second home or totally relocated to that area in Florida, were they establishing other relationships with different credit unions down there, or were they just saying, "Hey, Dort, why don't you take a look down here"?
Now, what we found is we would watch money move, right, in the wintertime. And money movement changed just slightly, but we could notice a trend that money would move a little bit differently in the wintertime than it did during the summertime. And what we really attributed that to is people were moving south, at least for a small amount of time. And so we did see that kind of shift. Also, the other reason that we did it is, just the pure economics, right? So, at this time, Michigan's economy is a little bit slower than Florida's economy. Now, at some point, those will probably reverse themselves. But,
Sure.
For me, who's been doing this for a number of years now, I really think economic diversification is the key to our overall success. And so now I can play the ups and downs of both markets and just really, again, to be there for our members wherever they are in their life cycle, financial life cycle.
That's great, Brian. Well, the first time we got together and had a discussion, you have a very interesting path to your current role as CEO at Dort Financial. Why don't you tell us a little bit about that journey and how you got to Dort Financial as CEO?
No, Rob, I appreciate that one too. So for me, this actually started back in college. So I was at Miami University in Oxford, Ohio. Go Redskins, by the way. They're having a great run at the NCAA basketball. So
yes, they certainly are. What are they, 24-0?
Yeah. Well, at one point they were 31-0, and someone said they lost, but I don't remember seeing they lost. So we're going to go with they're still undefeated. I haven't seen it yet. So my wife and I have our flag outside, of our house, our Miami flag. That's where we met. But anyway, to make a long story as short as I possibly can, I was walking across campus one day, and I just happened to see a sign that said, that they were looking for volunteer students for the local credit union. And I just happened to, think, okay, well, why not go do this, right? And so I went to the informational meeting, and the way it worked is it's all student run, right? So the CEO was a student, the executive team were students, the management level was students, and even the entry level work tellers were students, and everyone had to start off as a teller and kind of work your way up. It was kind of a cool little story throughout university life. They did have one professional oversight who would come in usually once a month at minimum, or at minimum, and kind of just look over everything, make sure the students weren't doing anything too wrong, right? And so they would come in, and that gentleman was Tim Islansky, who is actually the CEO of Right Pat Credit Union now. But back in the day, Tim was at Chaco Credit Union, a very small credit union in Hamilton, Ohio, which is about 20 minutes from Oxford. And it just so happened that I was actually interning at the credit union over the summer as the student-run credit union summer office manager. So I was doing everything from beginning to end. And Tim was in there one day checking our books, and he said, "Hey, have you ever thought about an internship at Chaco?" And I was like, "No, that sounds interesting." I'm like, what's the story? And they were looking for an intern in their marketing department, and excuse me, I apologize, in their ATM debit card area. And I said, "Wow, that sounds interesting. I'd love to learn a little bit more about this whole credit union story." So I actually applied and got the job. And then after that internship was over in the summertime, they hired me on as a part-time teller to work at the credit union. And so I was doing that through college and doing the teller work. And then one summer I kind of went to them and said, "Hey, I'd like to learn a little bit more about marketing. Can we come up with something in the marketing area that I can do?" And so they did that for me. And then back in the school year, I went back to telework. Anyway, it kind of just grew my passion for this credit union thing. And, I'm still young. And of course, when you're out of college and your parents are, trying to usher you off payroll as quick as possible, right? I'm just trying to find full-time work. And so I happened to come across a credit union in Dayton, Ohio. At the time, it was Dayton Area School Employees Federal Credit Union. And they offered me a job as a branch manager right out of college. And so I did that for a couple years, and then jumped to another credit union in Dayton called Universal One Credit Union. They're still around today. They're doing very well. And so I worked there for about 7 years. And in that time, Rob, it was awesome because I started off as a branch manager, and then one day I got a call and said, "Hey, you know what? You're really good at managing people. Would you like to manage our collections department?" And I was like, "Yeah, why not?" Like, I was always for trying something new. And so I went from not knowing a thing about collections to learning about collections and doing collections work. And then from there, I was able to jump into lending, and then I had a retail background, so I was able to jump into an AVP of branch operations level. And it was just really exciting, right? And I was learning a lot and just getting to do so many roles over 7 years that I'm forever grateful for the team down there and the management team that saw something in me that allowed me to do that. But then one day I was really mad, and I'm just being honest with you because it's kind of a funny story. I was really mad. And so I went into my office, and I was kind of immature at the time. I mean, I was 20, in my late 20s, early 30s, and I really wanted the door to slam. But at Universal One, we didn't have, some offices didn't have doors; they had glass doors, so they would just close really slowly, right? So I didn't get the effect I wanted, but it was nonetheless it shut. And I had a call from a recruiter, and they were looking for a vice president of lending at Scott Credit Union out in Edwardsville, Illinois, which is just on the other side of the river from St. Louis. And I interviewed and was ultimately offered that job there. And so that was kind of exciting. So relocating my entire family out to St. Louis, we had a great time there. I was there for about 5 years. In the middle of that, we did have some issues in our business lending area. I won't dive too much into it, but you can read about it. You can Google Scott Credit Union, and it will definitely come up. But it's a great team there, and so I, never want to talk bad about them. But it was, in that commercial space, something tragic did happen, and we had some fraud. And so I remember the CEO coming down to my office, and he said, "Hey, can you fix this?" And I had started a commercial lending area at Universal One, and so I was very familiar with commercial lending and how it worked. And I said, "Sure, I can do that for you." And I had great respect for Frank Paddock, who's the CEO there still today. And so I was able to lead through that change, and they promoted me to the chief lending officer position. I was able to lead through that business lending issue. And by the time I left there, we were the number one SBA lender in the state of Illinois and the number one SBA lender in the state of Missouri. And we were operating at a very high efficient level for commercial loans, consumer loans, and mortgages. So very exciting. And then I remember at some point in my career at Scott, I remember thinking, you know, I could probably do the CEO gig, right? So how do I do this, right? So I started talking to some people. So I started forming a network. And I said, how do I become a CEO of a credit union? And how do I learn how to do that? And, I'll never forget, I was talking to a very dear friend of mine who happens to be a recruiter in the credit union space. And they said to me, Brian, if you want to be a CEO of a larger credit union, let's say $1 billion or more, you have to go to a credit union that's, 3 to 5 billion and then work your way back as the CEO. And I thought, well, that's really interesting. Well, as luck would have it, within about a number of months, a credit union recruiter called me, a different one than I had talked to, but a credit union recruiter had called me out for a job at Hudson Valley Credit Union in Poughkeepsie, New York, as their senior vice president, chief lending officer. At the time I started there, they were $3.5 billion in assets. And by the time I left there after 5 years, we were $8 billion in assets. So very, larger scale credit union.
More than doubled the
more than
assets.
double where I was at, because at Scott, they were about 1.3 when I left. So more than double. And so I was able to learn and really kind of dig into how a bigger credit union works, what the efficiency gains were, how economies of scale worked. And I remember when I was interviewing for that job, the one question that the CEO asked me, which I thought was a really good question, was, are you prepared to scale up, and how are you going to do it quickly? And that was really powerful, right?
I like
and
that.
So I promised her I would, and I worked for a CEO there. Her name was Mary Madden. And when I tell you Mary Madden was one of the most phenomenal individuals to work for, I really learned so much from her and how I operate today. That it was probably the best 5-year stint I had at a credit union. I'm not just saying that hoping she listens to this podcast, but in all seriousness, I just saw her a couple weekends ago, and we were comparing stories. And I'm just so thankful for having her leadership. And I am thankful along the way for everyone who gave me an opportunity to grow and prosper. But she really focused in on how to make me a better CEO, because she knew that was my goal. And so, left there after 5 years when the recruiter called for the job at Dort Financial, and it's now been 4 years. It's been the fastest 4 years of my life.
Okay.
And I'm having a blast. I'm having a lot of fun. There's a lot of work that goes into it. Some days are a lot harder than others, but I'm just having a really good time. And I never, looking back, I can remember being that young kid walking across campus in college and never realizing that the credit union space would offer me this kind of opportunity, and all the opportunities that offered me through that course of 21 years now, 25 years now. It's been a storied career, right? And I'm so happy and so thankful for everyone I've met along the way, who's just made it incredible.
That's great. That's a great story. I remember, you sharing that story the first time we met. I just thought that was worth repeating. So I appreciate your
and
spending
it's
a
really
few
cool how
moments there.
your circles kind of cross back over. When I tell people that you never know when you're going to cross paths with someone again, it's the absolute truth. And things could have ended so much different at different places, right? But here at Dort Financial, I actually get to work with two executives again. One who I worked with at Universal One, and then one who I worked with at Scott Credit Union. I was able to recruit them here to work. And so you never know when your paths are going to cross again. So it really is, a small world.
So maybe not specifically at Dort Financial, because you've been there just 4 years, but describe a time in your career, and this might be the Scott Credit Union experience, was when, business was challenged. Growth was either plateauing or maybe even contracting. Sounds like you had a small issue with some fraud there at Scott. Tell me about how you managed that the business through that transition, and not only from the operational side, right? There's a financial aspect to it, of course, but the human side, the personal side of it with your employees.
Yeah, I really am. I think you picked up on that. I'm going to focus on the Scott Credit Union piece for really just a minute, right? And so let's just start when the whole thing happened, right? We saw it happen. We knew it happened. Our CEO at the time, Frank, did just a really great job of communicating that to our leadership team of what occurred. And when you're an officer of a credit union, so at the time I was vice president of consumer lending, right? When you have that title and you're actually being named as an officer in lawsuits, right? Again, all public information. I'm not sharing anything I should not.
Sure.
I think the key to that is you really have to have a moment in your career where you stop and think, right? And I can remember having the moment where I was like, is this where I need to be right now, or do I need to leave before all of this kind of hits the public, sector? Even though I had nothing to do with the actual fraud, it was in a whole different department.
Right.
Is this something I want to be associated with? And the fact that the CEO came down to me and sat me down and said, hey, I really want you to help lead me through this, right? Being a very servant leader, but asking for help, right? And saying, I need your expertise here. Can you do it? And are you willing to do it? One, made me respect him as a leader, because as a CEO, I can only imagine what was going through his head at the time when this was going to hit the press. And two, I think, just having that confidence in me was just, it was a real confidence booster for me. So I appreciate that. Now, so I took over the role, and immediately there was a couple of things at play here, right? So now some of my peers that I used to be peers with, now they're reporting to me, right? So that's the first issue. And how do you build those relationships, and how do you make sure that relationship can go to the next level? And so I was just very honest, and I sat them down, and we had open and honest discussions about, okay, this is how things have to operate a little bit differently now, but we're all still in this together. We're still going to move forward. We're still going to do great things. And I support you 100%, just like I did before. It's just the relationship changes slightly. And then I really had to focus on the business lending area and those employees, imagining what they had gone through, knowing that, their business manager had done some of this, right? And realizing that it was true, and realizing the part that they probably unknowingly played, right, in a sense, was really key. And so I had to sit them down and just kind of talk them through, like, listen, it's all going to be okay at the end of the day. We're going to go through some rough patches. We're going to deal with a lot here, but by the end of the day, we're in this together, and we're going to come through it on the other end together. And it's what you put in is what you're going to get out. And then the third thing is really just digging in and learning from mistakes. Like, how did this happen? Where did the checks and balances go wrong? And making sure all of our teams, cross-functional teams, risk management, internal audit, making sure that we were learning from the air, so that not only would we improve the business lending area, but we would improve the organization as a whole. And so I think when we took that approach of people first, lessons learned, and then moving together, moving forward all at once, it was really helpful for everyone that had to be involved. And really, what you don't realize is the impact it has had on the organization from the top down, everybody included, regardless of their position at the credit union, because everyone heard about it, right? Once it hits the public, people know about it. There was a famous person involved too, which was always an interesting problem to have. And so it just really was about maintaining transparency and open communication with everyone in the organization on what we could talk about at the time.
Brian, I think that's an incredible lesson for folks in the small to mid-sized business arena, right? Not only were you dealing with a challenge that most people just don't see in their professional careers, thankfully.
Yeah.
But you addressed it from the human side first, and secondarily the business side. I think that was very forward thinking on your part, and clearly you got the organization to the other side relatively quickly. About how long did it take for things to normalize?
I think in retrospect, it seemed like a long time, but it was really about 8 months before we were kind of, I would say, back to close to normal, and about a year and a half before we were actually operating at a very high level again.
I was expecting you to say 18 months for it to start feeling back to normal.
Yeah, no, I mean, we moved fairly quickly. I mean, again, I think what I was trying to move forward with the staff was in some of the areas. Remember, this is a credit union, so regardless of what noise is happening, we have to be there for all of our members, right? We have 70,000 people we serve every day, and we have to be there for them. And so we can let this noise, push us off track, or we can get back on track and just keep moving forward. And, again, some days were harder than others, and some days were long days. I mean, some days were, 7 to 7, or, even 7 to 9. And, obviously you're dealing with court cases and different things. So, me personally was being pulled out for different reasons. But
Sure.
I think, for me, it was all about maintaining that positivity. If I was going to vent, I would go into Frank's office and I would, vent real quick. So I was vented up, right? So I wasn't venting down. So people weren't underneath me were not feeling that stress. I would vent and then I would say, okay, thank you. And I would walk out of his office and move on with my day. He didn't even need to say a word. He just needed to let me get off my
Yes.
chest what I needed to say. But, I made a promise to him that we would get to the other side and that we would be a fantastic business lender again. And I held that promise, right? And so that was the key. But I did that with all the people that put the work in day to day. I could not have done it on my own. And I think that's the real lesson learned, back to your point, is really there's such a human nature in this business. And it's not just the people we serve, but it's the people that serve those people. And so I get to do this great job every day, but my first priority is always employees and making sure that they have a place to come to work. And I think I said this when we first talked. A lot of credit unions like to measure net promoter score or member engagement, right? And
Sure.
this
Certainly.
is my soapbox, so I'll keep this really short. I do not measure that. And I really firmly believe, and I just had a group of new employees start yesterday, and I was explaining this to them. If I can give employees a place to come every day that they love to come to work, and I'm not talking just pizza parties, I'm not talking jeans days and sweatshirt days, but I'm really talking about someplace that they love to work because, one, it's fulfilling work. Two, they have an opportunity to be promoted or change roles if they want to, or make a career out of it. And if I'm meeting their financial needs, right? They are going to meet the needs of our members because they love what they do. So I don't need to worry about engaging members and measuring their member engagement if I have employees who are doing just an absolute heck of a job out there because they are engaged. And so our mantra here is our true North Star is, we want to enrich the lives of members, communities, and employees. But here in my office, I focus on the employees and I let the employees then focus on the rest.
That's an amazing approach, and I know
Yeah.
that it's working well for you. So, what does the future hold for Dort Financial and for Flagler down in Florida?
Yeah.
Right?
Yeah.
What's the next 3 to 5 years horizon look like for you?
Yeah, right now we are, so really the acquisition took place at the end of 23. We converted their systems in 24 over to ours. So it's been, in the middle of 24. So it's been about, a year and a half since we converted. And for us, it's all about, just continuing to maintain our relationships in Florida. We did partner with Florida Atlantic University. We are their naming rights partner on their stadium. So it's Flagler Credit Union Stadium, home of the FAU Owls. And
All
so we're very
right.
excited about that. But what we love about that, Rob, is it's become more than just naming rights, right? When we started talking to the university, we said, yeah, we can, give you a certain amount of money to plaster our name on the side of your building, but we want a partnership, right? We want people that we can talk to. We want it to go beyond this, right? We want, how can we offer financial literacy to athletes? How can we offer financial literacy to other students? How can we, engage with an alumni association and help them, bring maybe a debit card with the Owls logo to life? Stay tuned. Things like that.
Okay.
So
All right.
really, we are just really focused on how do we take the relationships we have and just, make them even better than they are today. And that includes, really paying attention at home. When a member walks in because they need $1,000 because their car broke down, how do we engage with them and help them get there, right? They need to go to work. They have a family. They need to put food on the table. So how do we help them? And so it's big partnerships, but it comes down to the microeconomic level of helping that individual person and really going forward. And again, we have a strategic plan and, obviously growth is in that plan, how we do it and what we do and the kind of the mechanics behind it. There's a lot of different moving parts, but at the end of the day, it comes down to the credit union philosophy of people helping people. And we feel that if we do that, well, growth is just a byproduct, right? And we'll be successful because of that. I don't know about you, but where you live, but here you can basically throw a baseball and find a bank branch or a credit union branch, right? It's not that hard. And I'm not even a baseball player and I could probably hit one. But how do we set ourselves apart? So again, how do we go back to the community? How do we be the best employer? So we're really focused on some key strategic pillars of, growing the credit union, but doing it through the means of having the most empowered and engaged work staff, right? We're talking to our board of directors about how, the credit union has grown so much since they became board of directors. How do they level up so that they're the best board possible? How do we be an innovator, right? And in the financial space, with new products and services that meet the needs of members where they are. So, we toss around a lot of ideas. We make a lot of mistakes. We have fun doing it. And, we just hope that our employees recognize it, and we hope that our members recognize it, and we hope that the community we serve recognizes it. And, what I tell people is, when someone says, well, what can we do? Just try the credit union, right? Try a credit union, but, specifically try Dort Financial or Flagler Credit Union. We would love that.
Yeah, yeah. So what would be holding you back, or what would be slowing you down in achieving those goals for your near-term future?
I think it's just really you have to pay attention to what's happening in the world, right? I mean, there's real anxiety around a lot of different things, right? I mean, it's starting even with COVID, and I hate to bring those years back up, but starting with COVID, I mean, I can remember if you had on CNN, there was like a ticker of how many deaths were occurring because of COVID.
Yeah, I remember that.
Yeah, and I can just remember my CEO there at Hudson Valley saying, "Turn off the TV. Like, stop focusing on that piece of it. Like, let's look at something different. Let's change our perspective." And so I thought that was really important for employees to hear. Like, go do something. You can walk outside. Go do something that's good for you, regardless of the noise that's happening in the world, because there's always noise, right? I mean, take, for example, today, I was just in DC last week advocating for credit unions, right as we were, moving into Iran. And so for me, it was like, heads on a swivel, right? You're in DC. But I think there's so much noise that if I can just be there for the employees and our members and knowing that they have a safe place for their money, I'm not worried about the other things. I'm not worried about things getting in my way because I can pivot. But, as long as I'm a sound financial institution for my membership, that's what I care about.
Brian,
All those other things be damned.
I think that's the most sound advice that I've heard on this podcast in a number of weeks. So I think that's great advice.
Thank
right
you.
There is a lot of noise out there right now, but you know what? If you look back, there always has been a lot of noise.
Yeah, yeah. It just feels heavy. And maybe it's because I'm an adult now. Maybe it's because I have kids, or maybe I'm just in a different space in my life. To me, it feels heavy, and I think for the feedback I'm getting from employees is it's heavy, right? I mean, a couple of weeks ago, I guess it was months ago now, we had in Grand Blanc Township, which is literally like 3 miles from our corporate office, right? We had the gentleman who drove into the church and started shooting parishioners.
Yeah.
I mean, that was right around the corner for me, Rob, and it's scary and it's heavy. And so, we addressed that immediately with our staff, right? We said, hey, this happened, and this made us rethink the way we do business. So here at our corporate headquarters, we don't have a branch in this building. And so we decided, how do we make this, we have collections, we have loan officers who are turning people down, we have human resources, which obviously, can get a bad rap on certain days. And so how do we make people feel safe here? So we instantly decided to lock this building down. And then we decided to say, okay, we need to look at the branch space too, because how do we make them feel safer? Unfortunately, they have to be open to the public. That's just the nature of our business. But how do I make them feel safer? So we're researching ideas, and I call them like the Target red balls out front of their stores where they're concrete so that cars can't drive into their doors. We're looking at ways that we can place things like that in front of our branches that make the employees feel safer. Because again, it's all about employee engagement. And so if our employees feel safe and they feel appreciated and they know that we're listening to the noise and understanding that it's heavy and understanding that it hits close to home, and we can make them feel just an ounce bit safer here, we're going to do it. And so that's where our focus has been.
But Brian, I think you're taking it a step further. Yes, you're keeping your employees safe, but because of that advice your old CEO gave you, you're helping them turn the narrative around. Take stock in what is positive in your life. Go outside, breathe some fresh air, do something for someone in your community. And I think that's a tremendous outlook to have. And I'm sure that Dort Financial is in good hands under your leadership, my friend.
I appreciate that. I sure hope so. I think someone once said to me, be the change that you want to see in the world, right?
Yeah.
So, and so if I can do that in small increments, and I can have the next generation do that, or the next employee do that, we just make small increments together in our small bubble. Hopefully, it affects the entire world. But let's stick with our home, and let's stick with our community first, and let's make incremental change there. And that's at the core of being a credit union, right? It's people helping people. It's being more than financial services. And so I'm hoping to have some of that move forward in all of our employees.
For sure. Brian, I always ask my podcast guests as a last question, what kind of advice would you give a leader of a small or mid-sized business? But Brian, I think you just gave it.
Yeah. Well, thank you.
It was perfect.
I appreciate that. And I will add, let me just add one more piece of advice.
Of course.
Be authentic and be vulnerable, right? I know that I don't have all the answers, right? I've done some really cool stuff in my life and in my work life, but I certainly do not have all the answers. And so it's not unusual for me to be in an executive team meeting saying, hey, give me your thoughts on this. Like, I really want to know. And be willing to make the decision when you have to, but also be willing and open to, hey, I don't know everything. And as a leader, you don't have to know everything. All you have to do is set the tone for how the organization is going to run. And that's going to permeate all the way through the organization over time. But be authentic and do good. Right. And the other key advice that I have for a small and medium-sized business, leaders is, big dreams take bold moves. And that's a motto I live by too. Be willing to take chances, be willing to do things that are different. I can tell you, when I went into the board and as a CEO for 6 months, I walked into the boardroom and said, what do you think about buying a bank in Florida? That was a big, bold move, right?
I could imagine.
It was a big, bold move, and it turned out really well, and it made a big dream possible. And so I think it's important. So that's kind of my motto. I live by like 2 or 3 mottos depending on the day. But my overarching one is be authentic, but also big dreams take bold moves.
I love it. Big dreams take bold moves.
Yeah.
Wise, sage advice for our audience.
Yeah.
Brian Waldron, CEO of Dort Financial and Flagler Bank in Florida. Thank you so much for your time today. We really appreciate it.
Yeah, thanks for having me. I appreciate it.
Welcome to the Think Small podcast, hypergrowth for small businesses. So, what's slowing you down?